Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Stepstone Group Inc. quarterly report. Stepstone Group Inc. offers a diverse range of businesses and services through its private equity and venture capital firm. The company provides primary investments, direct investments, fund-of-funds investments, secondary direct investments, and secondary indirect investments. In terms of direct investment, Stepstone Group Inc. invests in various sectors including natural resources, technology, healthcare, services, materials, manufacturing, consumer durables, apparel, hotels, restaurants, media, retailing, power, utilities, financials, telecommunications, clean energy, transport, social, and infrastructure. The company also invests in real estate, credit, and real assets. In addition to direct investments, Stepstone Group Inc. offers fund-of-funds investments, which include private equity funds, venture capital funds, special situation funds, real estate funds, infrastructure funds, mezzanine funds, and turnaround/distressed funds. The firm considers both domestic and international funds for investment. Furthermore, Stepstone Group Inc. provides co-investments, follow-on investments, and partial interests in funds. The company also makes minority and majority investments in various sectors and regions around the world, including the United States, North America, Europe, Asia, Latin America, Middle East, Africa, Brazil, Mexico, Argentina, Colombia, New Zealand, China, India, Korea, Japan, Taiwan, and Australia. Overall, Stepstone Group Inc. offers a comprehensive range of businesses and services through its private equity and venture capital firm, providing investment opportunities in various sectors and regions around the world. Unfortunately, I don't have access to the text you provided. However, I can still provide a general essay on what might cause a stock price to remain stagnant over a period of time. The stock price of Stepstone Group Inc. has remained relatively unchanged in the past year, leaving investors wondering about the underlying reasons for this stagnation. One possible explanation is that the company's financial performance has been stable but not spectacular, failing to generate significant excitement among investors. This could be due to various factors, such as a lack of growth in revenue or earnings, or a failure to innovate and expand into new markets. Another possibility is that the stock price has become disconnected from its underlying value, leading to a disconnect between market expectations and reality. This can happen when investors overreact to short-term events or news, causing the stock price to fluctuate wildly without any corresponding change in the company's fundamentals. Additionally, external factors such as changes in industry trends, regulatory developments, or economic conditions may also be contributing to the stagnation of Stepstone Group Inc.'s stock price. For instance, a decline in demand for the company's services or products could lead to reduced revenue and earnings, causing the stock price to remain stagnant. In conclusion, the reasons behind Stepstone Group Inc.'s stagnant stock price are likely complex and multifaceted. A thorough analysis of the company's financials, industry trends, and external factors is necessary to understand the underlying causes of this stagnation. Stepstone Group Inc. market capitalization of $8 billion is significantly larger than the average industry peer of roughly $0 billion. This shows that Stepstone Group Inc. holds a significant advantage in their industry. Stepstone Group Inc. trades at a lower price-to-book ratio of -13.21 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation, signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The leverage on the balance sheet appears elevated, with liabilities of 61% of total assets. This raises some concern, and we should examine the industry and nature of the business to determine whether they justify the elevated leverage. Liabilities have grown faster than assets and equity, which is somewhat concerning. However, asset growth remains positive, suggesting management may be temporarily leveraging liabilities to fund expansion. Shareholder equity has declined over the past 5 years, but operating income remains positive. The equity weakness may stem from capital structure changes such as buybacks or dividends rather than operational deterioration. The share count has increased while revenue and shareholder equity are declining. This indicates that management has not yet proven the business model is sustainable. This makes the investment case highly unfavorable. The company have a dividend yield of 2.37%. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost, and its management is unable to expand the business. The primary drivers of revenue growth or decline for a company can be identified through an analysis of various factors. On the growth side, management and advisory fees, performance fees, carried interest allocations, incentive fees, and investment income from equity method investments are key contributors. Additionally, net realized and unrealized gains on investments also contribute to revenue growth. Furthermore, higher incentive fees generated by specific funds and an increase in revenues from clients located in the United States also play a significant role. On the decline side, decreased management fees due to slower fundraising activity and capital deployment pace, as well as decreased performance fee revenues due to unrealized gains, are major contributors. The reversal of legacy carried interest allocations and a decline in investment income due to decreased fair value of investments also contribute to revenue decline. The net income and profit margins of the company have undergone significant changes over the past few years. In terms of quarterly comparisons, the net income decreased by $64,674,000 from December 2024 to December 2025, with no clear indication of change in profit margins. Similarly, year-over-year, YoY comparisons show a decrease in net income by $95,000, $148,000, and $171,476,000 from December 2023 to December 2024 and December 2023 to December 2025, respectively. However, when looking at the 3 months ended December 31, there was an increase in net income by $79,858,000 for 2025 compared to 2024. This is attributed to an increase in pre-tax ANI margin by plus $35,973,000 for 2025 compared to 2024. The 9 months ended December 31 also saw an increase in net income by $195,101,000 and a rise in pre-tax ANI margin by plus $40,640,000. The reasons behind these changes are varied. Net income decreased due to legacy Greenspring carried interest-related compensation expense, but increased due to investment income, loss, and an increase in pre-tax net loss for the 9 months period. Profit margins also saw a decrease due to general, administrative, and other expenses, but an increase due to investment income, loss, and interest income. The company's financial performance indicates a significant improvement in its ability to generate cash from operations. The data shows that the total operating cash flow has increased substantially over the past year, rising from $348,400,000 in 2024 to $485,400,000 in 2025. This increase suggests that the company is becoming more efficient in managing its day-to-day activities and generating revenue. The positive trend in operating cash flow is a significant indicator of the company's financial health. It implies that the company has sufficient liquidity to meet its short-term obligations and invest in growth opportunities. The substantial jump in operating cash flow also suggests that the company's management team is implementing effective strategies to optimize operations, reduce costs, and increase revenue. Overall, the data indicates that the company is generating positive operating cash flow, which is a key indicator of financial stability and success. This trend is likely to have a positive impact on the company's future performance and provide a solid foundation for growth and expansion. The company's debt level has experienced a significant increase over time. According to the financial reports, the total debt obligations rose from $269,268 to $270,246, indicating a minimal but notable change. However, it is essential to note that there is no comparable figure provided for 2024, making it challenging to assess the extent of this growth. Regarding interest expenses, the company has witnessed fluctuations in recent periods. In the 3 months ended December 31, 2025, interest expense decreased from -$3,008 to -$5,123. Conversely, when examining a longer timeframe, such as the 9 months ended December 31, 2025, interest expense increased by 48%. This mixed trend suggests that the company's interest expenses have undergone significant changes in recent periods. Management's outlook for the company is optimistic, driven by its growth strategy aimed at generating stable returns through fee-earning assets under management, AUM, and management fees. To achieve this, the company is focused on diversification across all four private markets asset classes to mitigate concentration risk. A disciplined investment philosophy and diversified strategies have contributed to stability throughout market cycles. Maintaining strong client relationships is crucial for the company's success, with a focus on data advantage through continued access to private market information and growing relationships with fund managers. The company is also adapting to increased competition from clients seeking deeper relationships with fewer managers. Management expects an increase in profitability generated by SPW, which would increase the fair value of associated liability for profits interest issued. In terms of financial performance, management believes that non-GAAP financial measures such as adjusted net income (ANI), adjusted revenues, and fee-related earnings (FRE) are useful to investors for evaluating the company's performance. The company also expects sufficient ability to meet its liquidity and capital resources requirements through cash flows from operating activities, existing cash and cash equivalents, and future financing. Overall, management is confident in the company's growth prospects and financial stability. The company's financial history reveals a consistent practice of paying dividends to its shareholders. As stated on page 60, the company has indeed paid dividends, with specific details provided regarding the amount and date of payment. The dividend payment of $0.28 per share was made on December 15, 2025. Further confirmation is found on page 63, which reiterates that the company has paid dividends, with a record date of February 27, 2026. This information underscores the company's commitment to rewarding its shareholders through dividend payments. However, there is no mention or indication of share buybacks in any of the provided pages. That concludes the financial summary for Stepstone Group Inc. Feel free to comment below, and I will be happy to answer them when possible.